Welcome to the Monarch Group podcast. Today we are joined by Ryan at Rocket Local. He's going to be sharing some mortgage information, how the market's doing right now, and just some insights to give you some input onto how to deal with this current market because it's changed a lot in the last few years. So, hello, Ryan.
Hey, how's it going, Alex?
Hey, I'm
Thanks for having
delightful. You are more than welcome. It's great to have you here. I know with everything that you've been in the market with, being as a lender for a long time like you have, you've got a lot of good insights. So, I'd love to share that with some of our viewers, giving them some insights onto what they need to do in this market. So,
Absolutely.
I'd love it if you give me a quick intro into you, your background, and how you got started.
Sure, yeah. So I actually got started. I have family that's been in the mortgage industry for 20 plus years. And I personally was looking for a change after college. And my boss actually, he's like, hey, well, my boss now, he said, hey, come in for a little bit and shadow me. See how you like it. See what we do day to day, and just let me know if you like it or not. We can move to an official application and an official hiring process if you do like it. So I went in there, and it was a lot. The amount of folks that it takes to close a mortgage and close a mortgage loan, I had no idea. But after shadowing for a couple weeks, I just fell in love with it. The conversations that we have with home buyers and first-time home buyers especially, it resonated with me. I have a teaching background. That's what I went to college for. So the education portion of the mortgage process to potential buyers, I was able to kind of connect with that and resonate with that, and that's pretty much how I got my start. When I started, it was a little rough getting business up front, but you just have to stick with it. That's how this business is.
Yeah. And was it so Rocket wasn't your first company that you joined though, right?
It was not. It was actually Century Mortgage, and they had just gotten acquired by Bay Equity. Century was one of the largest lenders in the state at the time, and then when they were acquired, we kind of downscaled a little bit, but we then moved to another mortgage company based out of Indiana. We're kind of unhappy with them, so we moved back to Bay Equity. Then they were acquired by Rocket. So it's just crazy how this in this business, how sometimes you never know what tomorrow's going to bring you. But I'm along with the ride, and I've been with the same team and the same group of guys the whole time. So we've all moved around together. But now that I'm at Rocket, I think this is my home. I love it. Absolutely. So
Nice. Yeah. Awesome. So with it's currently July 23rd when we're recording this. There's been a lot of changes in the last few months as far as the market, the economic environment. What are you seeing on your side of things? How are things at the moment? Rates? What are you seeing?
Well, absolutely has been a lot change, a lot that has changed. So to be positive, I do think that the rate market has kind of adapted to the tension and volatility that's been occurring with the bond market and with oil and the Middle East and all the craziness that's been going on there. You might see a crazy headline on the news and like, oh no, the rates are going to adjust. I think the market's actually pre-adjusted to expect anything crazy. So, the rates have stayed in the sixes. They've kind of gone up a little bit, kind of gone down a little bit to the low sixes. But I always recommend folks just talking to an expert. Talk to me. I'll let you know what to expect next week or the following month of what I think the rates are going to do.
Yeah, I see a lot of people who they just, at least from my side of things, they look at what the interest rate number is, but don't actually correlate that to what the payment or what their outlook looks like. Is that what you go through with them?
Absolutely. And we do actually offer a 1.0 lender paid buy down that will have your rate 1% lower for the first year to kind of subsidize any volatility that's going on in the market. So as soon as that rate period is through, so it's 12 months, then we can look at maybe refinancing, maybe into a permanent lower rate if that is their goals, and we'll just have to take a look at it. Everybody's different.
And as of today's date, again, July 23rd, so things will change. What rates are you seeing right now? Like, what are today's rates?
Yeah, so we're seeing rates in the high sixes. Our FHA rates are actually, and that's for conventional. Our FHA rates are superb, as well as our VA rates. They're low sixes, high fives. So we're able to compete.
Yeah, and that's about what we saw sort of last year, wasn't it? Where they sort of were high and then they came down, and then when all the Middle East stuff started, they went back up.
Correct. It seems like we lost all progress that we made in the last 2 years of declining rates, and they kind of hop back up. But I always tell folks, don't worry about the timing of the dips. Just make the move if you're ready to make the move, because you'll lose an opportunity. You'll lose a house if you really like it, and you're worried about maybe a $30 difference in your monthly payment.
And it's more about being prepared regardless of what the rates are, just being prepared for the situation that they are in. If they're like, now's the time to buy, be prepared for that. If it's 6 months, then be prepared for that 6 months timeline.
100%. And make sure that you have your ducks in a row with a lender, with me, so you can see a house on a Saturday night, and that house may not look as appealing online, but you get there and like, wow, I'm in love with this house. Let me make an offer. Well, do you have a pre-approval? Yes, I do. I talked to Ryan a month ago. I talked to him 2 months ago. I'm always available. You can call me on a Saturday night at 9 o'clock, and I will revise your pre-approval so you can make that offer when that time's right.
Yeah, and because it's just because you get a pre-approval doesn't mean you have to buy a house. It just means you're ready to buy a house. So prefer people to be prepared if the situation arises than scrambling last minute and, like you said, miss out on opportunity.
100%. And I always say that I'm available, 24/7, but I also have a life too, so sometimes I'm not. So if you call me at a certain time, I might be, at the lake or on vacation. I'll always try to get back to you. But when it comes to getting pre-approved early, that is the number one thing I tell folks. We don't want to be scrambling at the last minute.
Yeah, and you just want to know what your payment's going to be like, 100%. Especially with these fluctuating payments, fluctuating rates, that they'll know like what their payment's going to look like at different scenarios. So with those rates, what they are right now, what do you foresee in the next 6 to 12 months? How do you think things are going to be changing some more?
So if inflation continues to decline, I do believe there will be a trickle down of rates. Now, rates always seem to move up way faster than they trickle down. So I do see a continuing cooling of the inflation rate the way it is now, and we'll be able to forecast that the rates will trickle down at least in the next 8 months, I believe, closer to 6% without any points.
So you're saying they're not going to go back to 3%?
Oh man, Alex, I wish we would be rich men if that was the case. But also, if the rates did do that, you would see an entire influx of buyers and home prices would inflate. We don't want to see that, because it would just push the unaffordability that sometimes we're struggling with in today's market.
It's always like a hot question that I get at the moment, because there are so many people still out there with those low 2s, 3% rates. And, I understand that's tough to move on and to get rid of. And so people wanting that in the future, hypothetically, if they were to go to that 3%, you'd have a small window where a small amount of people who did buy in that first, week, 2 weeks would benefit from that low rate. But then once everyone, like you said, comes back into the market, those house prices are going to start skyrocketing. So it's really, do they want it? Is it beneficial to be that low? Probably not, in my opinion, but lower that you just anticipate, that'd be great if we did see it come down below that 6%.
Yeah, COVID rates, that's what I call them. Again, I think the safe, healthy rate range for our economy is no lower than 4.5% to 5.5% at the max. And it's funny that you mentioned that. In the last 12 to 15 months, I've finally seen folks emerge that have the COVID rates, and their families are growing. They just have to make the move. I break the ice real quick with what the monthly payment's going to be. It's going to be different than what it would be at a 2.5%, 3.5% rate. They just have to buckle down, and all that money that they have been saving through the years with the lower interest rates, they might just have to use that as a higher down payment to lower their monthly estimated payment. And I'm finally, I hear calls every day, and it's like, hey Ryan, like I think we're finally ready. We have to make a move. We have to do it. So I just help them through it.
Yeah, and that's the a lot of those people who did buy in those early COVID years, they've seen a huge price increase in their current home,
Correct.
which also helps. So
That
yes,
helps out
the payment might be changing, but the amount of equity that they've gained doesn't take away the sting, but it at least helps a lot. That they're probably in a better position than a lot of people think when they actually go through the process.
Mm-hmm.
So other than how the rates are being right now, what are the challenges or misconceptions you're seeing in the market that buyers are going through, and what are you hearing?
It's mostly first-time buyers worried about the costs. Down payment, closing costs. We can help. We have programs that can help with that. Also in today's market, homes are sitting for a little longer, so it seems that the sellers are helping out quite a bit in terms of concessions. So if the sellers can help with the closing cost portion, we can kind of help with the down payment portion, and to get it to a comfortable spot where they feel like they can pull the trigger on something.
And that's the going through that process as well, because people may be in a situation where they want to buy, and then you may go through the numbers with them and provide their best case scenario, and it might not be the right time, which I know a conversation you're willing to have with people is like, hey, let's give it another 6 months or save up this much money. Like how does that conversation go?
Yeah, well, just like that. And also what I encourage people to do when they're out home shopping with you, for example, give me a list of the homes that you're going to look at for that day, and I'll run monthly payments on them. In the Louisville area, the zip codes matter, the municipalities matter. Taxes are going to be different. Say in J-Town, you have a little extra that you're going to tack onto your monthly payment because of the small city tax. Also, there's areas that need flood insurance. I'll be able to estimate what it's going to be with flood insurance, out kind of towards the airport, for example. But I always encourage people to send me property addresses. I will get them monthly payments associated with those properties so they can feel comfortable going in.
Yeah, and that just gives them more, makes them feel a much more informed buyer as well, that when they go into the house, they can weigh up those different values and different payments, and, not just how much they like the house, are they willing to pay that payment for said house, and compare that over the next one. So I know that would be a great step for people to take. Other than reaching out to you, getting pre-approved and figuring out the monthly payment, what mistakes are buyers making before they speak to you, or what's harming their process, if you will?
I think going to look at homes before they're pre-approved, that's always the number one. Googling certain monthly payments, using those monthly payment calculators that you find on certain real estate websites. Sometimes those payments are pretty close, sometimes they're not. And then they get their hopes up when their monthly payment's going to be higher because that certain calculator on there miscalculated the taxes. They have them paying $28 in monthly homeowners insurance. Absolutely, I see it all the time. So
yeah, those online numbers, it is a complete guess. There's no way, there's not any specific. So yeah, I can see that, because it's really tough as well that if they use one of those online ones that the numbers are just bogus and they're just made up essentially, to be looking at houses at that price point and then get the realization when their actual numbers come in they should be at a different price point, and that's a tough mindset to overcome.
100%.
So I could see that. I always tell people when I go through my buyer presentations with them on first meeting is find that out before you start looking online, because it is real hard to adjust. Every now and then it could be positive, where you could actually afford more than you're looking for as well, which is nice.
Yes.
But I feel like most time people should be less than where they've been looking at, which is a really tough mindset to have. Other than the challenges then of the rates not getting pre-approved, for going forward, what in the market, what opportunities are there out there? Because I know you mentioned some a little bit ago, but there's not just all negative right now. There's a lot of positives in the market right now.
Yeah, so I think I'm seeing buyers ask for everything from sellers. New roofs, new siding, everything. I think with home sitting on the market a little longer than usual, sellers are ready to move themselves. And so I always tell folks, don't be afraid to ask for everything. The worst thing they can say is no. And those are the type of opportunities that we did not see over the last 3 or 4 years with the frenzy that happened post COVID. So get in and just try it out. If you can make an offer and ask for some things, the worst thing they can do is say no.
Yeah, absolutely. Because right now, negotiations are back.
Mm-hmm.
Like you said, back in COVID times and a few years afterwards, it was pretty much what the seller wants, the seller gets.
Yeah,
and
absolutely.
You had to suck it up. And if you want the house, then you got to, bow down to that.
Yeah, because there's a line out the front door with other folks with backup offers.
And you've only got like a day to think about it. You've got no time.
Yeah.
So, yeah, I'm with you. Right now, negotiations are back. And a lot of my offers that I'm helping with my clients who are asking for closing costs, we're asking for home warranties.
Oh, yeah.
We're not having to forego inspections, which is huge. Yeah. Love that. And then also when it comes to repair negotiations as well, that, it's before it was pretty much, buying as is. You take the property. A lot of people were getting rid of inspections or saying no repair requests. But right now we're seeing things come back to where you can ask for those things as well. Yeah. Any other opportunities there outside of asking for things? Like, are there any programs or anything in-house that Rocket has that people can be taking advantage of?
Yeah, absolutely. So right now we have, like I mentioned, we do have a 1.0 lender paid buy down. Basically, your interest rate will be 1% lower for the first 12 payments of your loan. That is a subsidy. Folks think that it is a adjustable rate. I'm like, no, it's not. Your rate is what the rate is. We'll just subsidize the payment difference of if it were to be 1% lower for that first year. We'll just subsidize that off your payment and give you some savings there. We also have a 2% grant that is eligible for buyers that meet they're under the 80% AMI income limit. That helps out quite a bit. If you compare that up with some seller concessions, you can buy a house for $500,000, including your earnest money. But that's a few things, and we also have if you opt out of that 1.0 lender paid buy down, which is available to every single person that we talk to, we can take that and turn it into cash. To just use that towards your closing costs as well, if that doesn't make sense for you. If your payment makes sense for the first 12 months, then we can work around just using that as a cash lender paid credit for you.
Wow. So, that's awesome that you've got a lot of programs going on. I know the buy down one, we've had some clients that we've worked with together that have taken advantage of that. And I think our lowest was 260 at the closing table, I think one of them was.
Oh, yeah.
Yeah, which is just
incredible.
Crazy. Yeah, it's wild. So being in that situation where first-time home buyers have got some great opportunities now as far as negotiations are there, asking for things, those programs, what would you say is their best steps as far as like they're a first-time home buyer, they may be in a rental, living with family, and they wanted to buy a house? What would you say they need to start doing other than getting pre-approved? What's the steps that they need to take?
Yeah, and what I offer is a short budget class almost. So if they are not quite where they want to be in terms of savings, I can look at, because I get their pay stubs, I get their income, everything in order to qualify for the loan. We get bank statements as well, so I can see what they're spending their money on. I can see, hey, just put back this much every month, and 8 months down the road, 9 months down the road, sometimes 3 months down the road, boom, you'll be ready for a official pre-approval, or to just have enough cushion. You might already be pre-approved, but you might want to have a little bit of cushion after you close for furniture or just to have a safety net as well. So I can help people do that.
Okay, and that's really important because a lot of people just go in a little blind because obviously first-time home buyers, you don't know what you don't know, and it's not just going and buying a house. There's a lot of steps to it. So given that full package, I could see how that'd be very beneficial for a first-time home buyer. Make sure that when they do buy the house, they're A, not house poor, and B, prepared, because once you're a homeowner, your landlord's not going to fix stuff. You're
in there.
If you're living with your parents, they're not going to fix stuff. It's on you. So I love that because we always want people to be comfortable and happy when they get into a house and not have to worry about it every single day. So love that. Are there any other programs or anything else that Rocket has that you wanted to talk about or wanted to share that you've got going on right now?
We're always coming out with new programs, and the ones that I discussed of what we have available right now, we do have an official down payment assistance program coming out in late fall as well.
Okay.
So I'm the perfect contact for that for your local Rocket mortgage lender, 10539 Waterson Trail. We take walk-ins. I'm happy to sit down with you as well to discuss any future programs that we might have that you might be interested in.
Is that down payment going to be through like the local government or?
No, not quite sure where those funds are going to come from yet. I assume typical traditional down payment assistance, at least in Kentucky, it's repayable. So there's other states that do basically a grant, but you're stuck in that house for 5 years until that grant is forgiven. Unless if you try to sell, you have to pay it back.
Okay.
So I think with Rockets, it's going to be great. It's just repayable, so you're not stuck in there forever.
So it's going to be in-house, though. It's going to be sort of Rocket, coming from somewhere from Rocket.
Yes.
Okay.
Yes, 100%.
Awesome.
So underwriting should be pretty smooth as well. Fingers crossed on that. We'll see.
Yeah, we'll be excited to hear more about that in the future when it comes out.
Yeah.
Now, do you and Rocket do anything with like credit scores? Because a lot of people, do have credit scores not ideal for buying a house. Do you all help with that?
Yeah, we have a free credit repair service. All it takes is for you to apply with me. I'll pull a credit report. I'll take a look at the report, and we can refer it over to our credit repair folks. Just have to make sure to get referred over. I do believe the minimum credit score is a 560. So, 580 to 600 is where we like to see to even get started in the pre-approval process. So if we can get you in early, sometimes it takes a month, sometimes it takes 2 months to get that credit score fixed. But they'll refer it back over to me after that department's through with it, and we'll get started in the pre-approval process.
That's awesome, because there's a lot of gray space for that sort of market where you don't really know who's going to be effective and which companies. So having it all under one house with a trusted name makes a big difference. Now, on Rocket's name, I'd say there's a misconception in the market, and the branch that you're with, a Rocket Mortgage local, correct?
That's correct, yes.
Okay. And how does that differ from like the overall umbrella of Rocket Mortgage?
Yeah, so Rocket, they made an initiative to basically get more boots on the ground type loan officers that already know the agents, know the market, know the community, know the clients in the community. So they basically wanted to utilize their technology, their rates, and to get some local business and get a face in front of their mortgage lender. I think that was the main thing why they started doing that, and I'm super thankful to be a part of it.
Yeah, it's because I know a lot of people have a lot of different thoughts about Rocket, both good and bad. So I think that I'm with that mindset that having that local person, like whenever I've spoke to clients who are like, hey, speak to Ryan, my first thing is, you can go drive to his office. It's not some call center. It's 100%. Not somewhere that, you have to try and chase down a bunch of numbers. It's like, here's his direct number, here's his office, go speak to him. And I know in the current world that we're in with AI coming out and everything, that face-to-face is so important.
100%. Yeah. And in Rocket Mortgage, they are an online lender, but opening up the local division allowed them to implement their already existing amazing technology and put a face in front of it as well.
Yeah, that's like the best of both worlds right there.
Sure is.
Yeah. So are you turning away from mortgages and Rocket now? Are you from Louisville?
Yes. Born and raised in Louisville. I graduated from Eastern High School and followed suit at the University of Louisville. And I have family here. My wife's from here as well, her family. So I love it here, and I love this community.
What is it that you love about it?
I think the main thing, and people say we're a big, small city. So everyone that knows somebody that as well. And it's some degree of separation there, and it's really cool. Word travels quick for everything. And I think that's one of the main things that I like, other than, everything is 10 minutes away, 15 minutes away. We have a great highway system. I can get wherever I need to go for work, meet a client. It's just an amazing local community.
Yeah. And where do you like to eat? What's your favorite? I always ask people that, and it's a hard question. I know
you're
got so much.
You're a big food guy too. So My favorite right now, and it always changes, it is Mojito in Havana in St. Matthews. We've been going there a lot. I love Cuban cuisine. And then also for lunch, I'm a huge fan of Gustavo's or just El Nepal. You can't go wrong.
Yeah, those are classic staples.
Man,
yeah,
classic.
I feel like that this, if I ask you this in about 2-3 years, that may be changing though, because you just had a little one, so you may having to,
we're dragging them out everywhere. Yeah,
may have to be whatever Louisville's versions of Chuck E. Cheese or something like that might be your favorite then. Now,
absolutely.
What else? What are the areas in Louisville? Are some of the ones that you're seeing like evolving and developing at the moment from your side of like lending? What do you see from there?
Seeing a lot coming out of the East End. Typically, it seems like most of those homes were just sitting, just owner occupied folks that didn't want to make a move. It seems like there's a lot of those homes that are kind of popping back up, especially the neighborhood that I grew up in over in Forest Springs. The last few years, there might be 1 or 2 homes over there for sale. Those folks are starting to maybe downsize. It seems like I've talked to a few folks that are going from a neighborhood like that. Kids are back at, kids are out of college now, have their own families, and they're ready to kind of downsize. So
yeah, nice. Yeah, I've seen a lot going on that, and people finally haven't, like from the conversation earlier, people will come to the realization rates are not going to go to Actor 3.
No.
They need to make a move and need to make it happen. Yeah. So if someone was looking to make a move, other than speaking to you and getting pre-approved, what would you say is your one bit of like big advice that people need to hear?
I think it's always important to watch what's going on the news, just because that can affect what prices are in general. So that'll affect your budget. It's gas prices right now, jumped up $1.50 or something, that adds up. Especially you have a family that, you're going to soccer practice, going to baseball practice, and that monthly payment that you have on your residence or a future residence, that all factors into your budget as well. So just be vigilant. I'll try to work with you as much as I can to sort that out. But
it's back to that being prepared that we talked about earlier. Is just keep an eye on what's happening in the environment, local and nationwide, or really international these days as well, and then come in prepared when they come to speak to you.
100%, yeah. And there's always, I always tell folks when I get off the phone with them, like, hey, you're gonna have questions as soon as you hang up. When you go sit down on the couch tonight with your spouse, don't be afraid to text me. Text me at 8:30 o'clock, 8:30, 9 o'clock. That's fine. Like, I'll be there to answer. If I don't respond, I'll respond to you first thing in the morning. But just don't, I'm always available. So
yeah, and that makes a difference. It really does. So if people are wanting to speak to you about the market or get pre-approved to start the buying process, how do they get hold of you? How do they find you?
Just my phone number, 502-424-6554. We're at 10539 Waterson Trail in the heart of J-Town across from the firehouse. We love walk-ins. We love to see you come in. I love surprises. So bring a taco or something, but
Isn't there a Mexican restaurant just down from you as well?
Oh yeah, El Nepal. I'm going there in about 15 minutes. So
nice. Yeah, see, that's where you'll find Ryan. You put your office address. Really, don't go to your office. Just go to El Nepal.
I'll have my laptop so you can meet me over there.
Yeah,
too,
there you go. Yeah. Well, Awesome. I appreciate you coming in, Ryan. Thanks
Alex.
for sharing that information. Really helpful tips for buyers, especially with how things are changing right now. So thank you again. We'll put all of your information in the description.
Okay.
If you're watching out there, definitely recommend you reach out to Ryan, talk about the process, whether it be you're ready now or thinking about it in 1-2+ years. Have the conversation now so you know exactly what steps to take and sort of build up and be prepared. It's always advantageous to start that earlier rather than later. So I hope you enjoyed this episode, and we'll catch you on the next video.